Hey everyone. So you've definitely heard the term hedge fund, right? It's always in movies, on the news. It sounds like this secret world of Wall Street billionaires. But what does it actually mean?
Are they just for billionaires? Is it some kind of secret money machine? Well, those are exactly the questions we're going to dig into today. We're going to pull back the curtain, break it all down, what they are, how they work, and yeah, who gets to play in this super exclusive sandbox.
All right, so let's jump right in. What is a hedge fund? Behind all that complicated Wall Street jargon, the basic idea is actually pretty straightforward.
Okay, so picture this. It's basically a giant, exclusive pot of money. It's pulled together from really wealthy people and big institutions. Then a team of pro managers takes that giant pot and invests it. Simple enough, right? But here's the kicker. The thing that makes it a hedge fund and not something else is all about how they invest that money.
And that's where they're completely different from something like a mutual fund, which you've probably heard of. See, a mutual fund usually just buys stocks or bonds and kind of holds on to them. Hedge funds? Oh, they play a totally different game. They use these really advanced, super aggressive strategies to try and make money no matter what the market is doing. Up, down, sideways, you name it.
So, what are these advanced strategies we're talking about? Their playbook is absolutely massive, but the name itself, hedge fund, actually gives you a huge clue about the original idea. It all comes down to hedging your bets.
Okay, here's a super simple way to think about it. Let's say a fund makes a long bet. They're betting that stock A is going to go up, but to protect themselves, they might also make a short bet on a similar company, stock B, betting that it's going to fall. See what they did there? Now, if the whole market tanks, the money they make from stock B falling can help offset the money they lost on stock A. It's like having an umbrella just in case it rains. It's a financial safety net.
But hedging? That's just the beginning. That's just one tool in a massive toolbox. They also use something called leverage, which is a fancy way of saying they use borrowed money to make their bets way, way bigger. It cranks up the potential wins, but also the potential losses. They're also playing with complex things called derivatives, betting on currencies, investing in startups, you name it. Their whole game is designed for high-stakes, high-risk moves. Okay, so you might be thinking, wow, if these funds are so powerful, why can't I just put my money in one? Well, it turns out the price of admission is incredibly steep, and it's not just about having a lot of cash.
The reason is you have to be what's called an accredited investor. It's a legal term, and it basically means you have a super high net worth or income. Regulators have decided that people at this level are financially savvy enough to understand, and more importantly, to survive the huge risks involved.
And look, this isn't just about being some secret exclusive club for the rich. It's actually meant to be a safety measure. Because hedge funds have way fewer rules than mutual funds, they can take on these insane levels of risk. So these regulations are there to protect regular folks from investment strategies that could, completely wipe you out.
All right, so if you're the one managing all this money and making these high-wire bets, how do you get paid? Well, this brings us to the most famous and probably most controversial part of the hedge fund world, the fee structure.
It's often called the 2 and 20 rule. Let's start with the 2. That stands for a 2% management fee. So every year, the fund managers take 2% of the total money in the fund. And get this, they take that fee whether the fund makes $1 billion or loses $1 billion. It's their payment just for showing up to work.
Okay, now for the 20. This is the real game changer. On top of that 2% fee, the managers also get to keep 20% of all the profits. That's right, a fifth of all the winnings. And that is the massive incentive that pushes them to chase those huge, risky returns.
So let's recap, right? We've got these super complex strategies, it's only for the ultra-wealthy, and the fees are, wow, they're really high. So the big question is it all worth it? And this really gets to the heart of the debate. You have these high fees and these huge risks. But here's the thing. They don't always get better returns than just a regular, boring investment. A lot of the time, all that complexity and cost doesn't actually beat the market. The promise of incredible returns, well, it doesn't always come true.
And that's the final billion-dollar question, isn't it? If you're one of the few people who can actually invest in one of these, is that hunt for an incredible payday really worth the massive risk and the sky-high cost? I guess for them, that's the gamble they're willing to take.